Hey traders, welcome to a global macro update. We have a really quick section of the economic calendar for today, and then we're going to jump right into the charts here. But first, let's see what came out today and what's coming out for the rest of the week for the economic calendar in terms of the really important stuff that we do need to keep in mind. So this morning we got the PMI numbers for the UK, which was actually much better than the forecasted 47. So they were actually still looking at a potential contraction below the 50 mark, but they smashed it out of the park here at 55.3, well above the 50 mark. So the Purchasing Managers Index in GBP is looking strong, as well as the United States also had the PMI numbers for June, and their forecast was just above the 50 mark, and they smashed it out of the park as well at 57.1. So a lot of the Purchasing Managers Index numbers that are coming out are more positive compared to what they were a month ago and 2 months ago, and what I think many people expected for sure, in my personal opinion. We do have the RBA interest rates for Australia coming a little bit later today, so it looks like they are going to keep it at 0.25% or 25 basis points. So we'll see where that goes. I don't really see it going higher at all. If not, it's probably going to go lower for a lot of these other central bankers, with the intention that more stimulus, easier credit, easier money will be hopefully benefiting the economy, and hopefully kind of getting it back into shape is, I think, what their plan is. So on Tuesday, not a whole lot. They got the job openings and some PMI numbers for Canada. And then Thursday, they got the initial job loss claims, which hasn't really impacted the market that much. And then for Friday, you got the employment change for Canada, as well as some PPI numbers for the end of the week on Friday for the United States. So nothing crazy. The main thing I think we're going to be looking at is just the PMI numbers, which are looking really positive so far. So that is a positive thing for the overall economy in whatever country that we are talking about. So it's looking more positive. I know the economy looks weaker for sure, and it is, with the lockdown happening and obviously a lot of corporations and companies getting hit really hard. But in terms of the economic data that is coming out, it is looking a lot more optimistic and a lot more bullish compared to, let's say, 2 months ago, when, including me, I thought we were going into a deep recession, where the consumer, not just in the States, but the consumer globally, is really able to take the hit and be resilient in this difficult time. So now that we've talked about that, we're now going to go into the charts. Like always, we will start off with the S&P 500, which has been really bullish here. And let's just take this back to the daily and then see what happened from here. So we're holding this nice ascending trend line, and we're squeezing. And what I was looking for is the price to hold the previous resistance right around here. Now we see that it's not just the wicks that we're looking for, but it's the candle closures, and that's exactly what we got within this key level of resistance, kind of around mid-June, where we see lots of wicks to the upside. We see lots of wicks all around here, but we do not see any candle closures above this zone. Now what happened after is, around here, we actually got the candle to close above the zone, and this candle right here was the key retest, validating the previous resistance as a new level of support. So then when we do look on the smaller time frame, we do see that there was a tiny little descending wedge that was squeezing the price between a series of lower highs, if we really look on the smaller time frame like this, and then the horizontal key level of support, which was a previous level of resistance. And it was a confluent zone because of the daily chart. This horizontal zone right here, this red horizontal zone, in line with this descending zone, which is connecting the series of lower highs, creating a strong level of demand at around 31.30, 31.20, you can call it somewhere around there. And there's a descending zone squeezed to the upside, and now we are on a bullish move and a continuation to the upside, in my personal belief. So overall, it looks like a great risk on environment, and the sentiment is looking pretty bullish, where global investors are seeking to put risk on and have a high tolerance of risk, and are looking to invest and trade more speculative assets. And we'll look at the NASDAQ, how much it moved to the upside, really showing the strength of the buyers, especially in the tech section, or tech sector. So that's going to be the new level of support that we could potentially see now, 31.50. That was a key zone that we did break above and is trading above for an extended period of time, so we know that it's a breakout. Overall, it's looking really solid. The next key level of resistance is around 32.30 at this previous high. But actually, that's what we can do also is just see the size of this to give us some indication of where we could potentially find a target for this area. So let's just look at 33.50 on the 4-hour to see if any major levels. So I would say this is a very significant major level around right there to maybe right around there. Maybe a little bit further down. Somewhere around there. So that's going to be the next major level of resistance in my personal opinion. And then we got the all-time high. So it sounds pretty crazy, I know, but you got to look at the price action. And the price action, in my opinion, right now is showing me that the bulls are eager to enter, and there's a lot of buyers anticipating that the price will increase higher as long as things keep chugging along, which seems like it is. So overall, it's looking pretty bullish. We might get a little pullback here. I do not mind, but at the end of the day, I do think that the price is still going to continue to the upside. There's nothing really, in my opinion, that would make it go to the downside. I know there's fear of COVID, there's lockdown and all that stuff, but we've been able to increase the price, making higher highs and higher lows in the worst of it. So when PMI numbers, when economic data is looking more positive and it's turning to a more bullish sign, a direction, that definitely is in confluence with the overall structure that we see within the S&P. So definitely we could get a little bit of a pullback, but my overall direction is a risk on bullish move to the upside. And then the next level of resistance is around 32.30, but we got a decent amount of play before that happens. It's around 2% within the SPX, which is a pretty significant move. So that's the SPX, looking really solid, very bullish, extremely bullish, but pretty bullish in my overall perspective, and I think the momentum will continue moving to the upside. Now, quickly looking at the NASDAQ here, we did get a 1, 2, 3 resistances to form a potential wedge. It already broke to the upside. We could see a little bit of a retest here, but overall, this is a condensed version of the tech stocks that are like the stay-at-home type of companies that are really doing well, benefiting from the lockdown, like the Netflix, like the Amazons, all those types of companies that are benefiting from people staying at home are the ones that are really seeing a lot of bids coming into the market, and NASDAQ is an index for a lot of these companies. So we see a huge move to the upside, big gap up for this Monday morning, potentially initiating the sentiment for the rest of the week. So obviously, if you are looking to long any index, the NASDAQ is obviously, just looking at the relative strength, extremely bullish. And then when we look at things like the Russell 2000, which hasn't been as strong relative to things like the NASDAQ or the S&P 500, is still holding this series of higher lows. We still have not broken the 1460 key level of resistance, which would invalidate this head and shoulders. So let's quickly get the head and shoulders structure right here. I believe it's this one. Maybe not. It's in one of these here. There we go, head and shoulders. So we got the left shoulder right here. We got the nice head right there. And then we got the shoulder right here, which has been quite a long of a shoulder. But as long as it's holding around 1450 and below, this potential head and shoulders is still in play. But if it does break to the upside, breaking this resistance, that would be an invalidation of this head and shoulders, and the momentum would be continuing to the upside in confluence with the S&P, the NASDAQ, and a lot of the other indexes that we're looking at. So overall, the Russell 2000 is showing a consolidation, but the NASDAQ is showing extreme risk on sentiment and bullishness for the overall stock market. So I think that's a really good way to look at not just one index, but looking at multiple, looking at the small caps not receiving near as much bids as these large cap tech companies that are in the NASDAQ. And then the volatility index dropped substantially well below the support, and it just looks like we are reducing in volatility, which is a great sign for the overall risk on sentiment, because if volatility is going to the downside, if there's a reduction in volatility, it's usually a risk on sentiment. Whereas if it's moving to the upside, if the volatility is exploding, it's generally a risk off sentiment. So we're seeing it slowly diminish here. We're seeing it slowly fade to the downside, which is an overall great place for the VIX to be if you are looking to long S&P 500 or other risk on instruments. So that's going to be my overall analysis in terms of the US equities. There's not much has happened. It looks really strong. Overall, I think the bulls are more confident than the bears, and it's looking like they are definitely beating them and moving to the upside, and I think it will continue. I don't really see any other reason that it wouldn't. So that's my overall analysis of the US equities market and a little bit of the VIX. We're now going to jump into some of the global indexes here, looking at the Japanese stock market, the Nikkei 225. We do see that the UK's FTSE 100 has broken, it looks like, above the previous high here, and it has closed, so that's a pretty bullish candle. It's a bullish engulfing candle, engulfing 1, 2, 3, 4, 5, 6, 7 previous days worth of trading, which is very significant, and it has broken above the key significant descending trend line. And this is a nice symmetrical triangle breakout to the upside, it looks like. And that's an extremely bullish structure in my view, as well as looking at some things like the Nikkei 225, which is the Japanese index, looking like it's in a similar type of situation where you have a ascending zone, which is a longer term time frame, squeezing the price towards a series of higher highs and higher lows, and then you get this series of lower highs, lower highs, lower highs, lower highs. All of these indexes are looking very similar. You get the nice symmetrical triangle. You could say it is a descending triangle, but you're getting a squeeze between the buyers and sellers. And what the FTSE 100 is illustrating is the buyers are beating the sellers, are more confident, have more conviction, and are willing to stand their ground and push the price higher, breaking resistances and holding supports. So overall, it does look bullish for the global markets here. ASX, which is the Australian stock market, did make a higher high compared to the previous high it made in mid-June. So that's also a bullish move. If we look right here, made a new higher high, and if it's able to hold the previous resistance as a new level of support, creating a higher low, obviously that's overall great for the bulls in the market. The Japanese stock market index has not made a higher high, so it's still holding that zone. But overall, it does look pretty strong. And then the DAX, the German stock market, is looking pretty favorable as well, breaking the key level of resistance, holding it potentially as a new level of support. So in the global markets, it does look pretty strong. It's definitely a risk-on environment where global investors are looking to seek risk and have a high tolerance for risk compared to when they're fearful, worried, anxious, and they don't want anything to do with risk. So overall, right now, it's looking like taking risk is the right approach, and looking for instruments that allow you to gain exposure and risk on sentiment is the current situation that you should be in at this very moment, in my personal opinion, and that's how I'm positioning myself within the markets. I'm going to get a little bit of coffee, and then we'll continue on our analysis. All right, so that was the global equities here. We're now going to look at, in my opinion, a very important chart that a lot of global macro traders and investors should be looking at, and that is the DXY, the US dollar currency index. Now, we've been talking about this ascending wedge, ascending triangle, whatever you want to call it, a potential continuation pattern to the downside since we broke, and then we had a massive move to the downside, and then we started seeing a consolidation. Previous key level of resistance support, and then we saw two touches validating it as a resistance zone, and then we were thinking we could potentially see a rollover with an ascending wedge breakdown, and that's exactly what it looks like we are going to get. So overall, momentum's to the downside. That is obvious. We can see on the chart. Number two, overall sentiment is risk on. So the US dollar currency does not do well when global investors are seeking risk, because you need to sell the US dollar in order to buy any American stock, commodity, oil, you name it, right? So there is a good relationship between the US dollar as well as any other real risk on asset. So when this is going down and the equities markets, NASDAQ, S&P, Russell 2000, global markets are all moving to the upside, definitely risk on sentiment in my personal view. So we can see that it broke these series of higher lows. We got 1, 2, 3 rejections, at least 3 rejections for me is a valid zone that I can say is, if it breaks, will be a potential shift in trend. And we see a significant move to the downside, breaking the previous low. So it's made a lower low, as well as looking at the smaller term time frame, we see a series of lower highs and lower lows. So the overall momentum is already to the downside, and we've already broken our previous low right here. And it looks like we are retesting it for a new level of resistance. So if we're able to hold this level of resistance and then continue the momentum to the downside, I think we will have another move similar to what we had potentially maybe here, where we're just going to get a move to the downside here, maybe a little bit of a retest, but I think the overall strength of the US dollar is going to continue to weaken in my personal view. Let's just get our potential zone that is going to be a take profit level. So if we go like here, you see it's probably going to be around 95. We'll see where it goes, but that's my current analysis for the DXY. It just freshly broke out of an ascending wedge, which is a bearish continuation pattern to the downside, and I think the momentum will continue because the overall market is looking bullish. People are taking capital out of the US dollar, out of treasuries, and into more risky, more speculative assets and instruments like the equities market, like crypto in my personal opinion, and that's where the market is currently heading. And when we really look back here, we can see the next major level is going to be around 94. But we will see. We got a mid-range target just from the geometry of the ascending triangle, or ascending wedge, sorry. But we do have a major level right here that we could be hitting for the next key zone, which is really far away. Just in the US dollar currency index, that's 2%. That's a huge move in currencies. So if that is the case, we will be really looking at the overall markets and stocks. We'll also be looking at gold and silver because they will probably be doing well if the US dollar index or US dollar currency index is weakening and weakening. So that's the overall direction that I think the market is going for this upcoming week. Is I do think that with the US dollar weakening, things like equities, even gold and silver and crypto will be doing well because the US dollar is a great indicator for risk on, risk off, because we can see last time what happened when there was major fear, uncertainty, worry, anxiety in the market. This was March 8th to March 19th. This was the worst time in the equities market. Everyone rushed to the dollar and the yen. Those were the safe haven currencies of the world. People didn't rush to gold. People didn't rush to cryptocurrencies like Bitcoin. They rushed to safe haven currencies like the yen and like the dollar. So when we see risk on, where people aren't as worried, people aren't as scared, and there is more certainty and optimism for the future, they're going to do the opposite. So they're going to leave things that have very low ROI like cash or bonds, and they're going to put and park their capital in places that will allow their capital to grow over time, like many of the risk on currencies, or not currencies, risk on assets that we are talking about, like stocks, like crypto, and all that stuff. So I think the overall momentum will continue in the direction that we've already kind of been on the path, in my personal opinion. So we're just going to be basically doing the same thing as we did last week, looking for longs in overall equities markets, in crypto. And in crypto, we do very extensive relative strength analysis. So we're not just randomly picking an alt. We are diving deep, going through relative strength as well as a whole other list of stuff in order to actually find the right alt to choose if you are looking in the altcoin market. We will talk about that within the cryptocurrency market update, but we do have a question within the TikTok, so we'll answer that, and then we'll go into quickly looking at some bonds because they do look like the yield has increased, which we'll talk about very shortly here. So ANEP, A-N-E-N, Epic, I think is how you say your name. I don't exactly know. How do you check USD sentiment against EU? So the question is, how do you check US dollar currency sentiment? Well, one way to do it would be to use DXY, which is the US dollar currency index. And what this is a composition of different currencies compared to the US dollar and it's mainly comprised of euro. I believe it's 60% euro. So the US dollar currency index, DXY, looks similar to an inverse chart of the euro USD chart. So if you look at euro USD and flip it, it'll look somewhat similar to the US dollar currency index. And there's also GBP, there's also, I believe, yen, there's also some krona, and some other currencies as well. So just looking at the DXY is a good way to gauge the strength or weakness of the US dollar. And then you can also look at some ways to kind of look at the relative strength or weakness of the US dollar. Normally I don't really talk about this stuff, but for you, I will definitely share some wisdom and secrets. So this is how I gauge the US dollar compared to other risk off currencies that are safe havens. So what are safe haven currencies? You got the US dollar, you got the Japanese yen, you got the euro, you got the Swiss franc or CHF, and you bundle them all up and compare them against a currency. So then you are gauging relative strength and weakness based off of a comparison with one other currency that's a risk on. And I do this with risk off as well. So I just chose odd. So then I compare US dollar, CHF, euro, and JPY with odd. And you got the starting point, which is always going to be the same. So right now, compared with the Australian dollar, we see that JPY is the weakest when you're looking at the time frame starting from June 23rd. If you're zooming in, we see that the US dollar is actually the weakest, dropping 1.9% since June 30th compared to the Australian dollar. Or you can zoom in and out. So basically, finding relative strength and weakness, that's how I do it in terms of the currencies. So if you're just looking at it from an extremely basic standpoint, not looking at charts, just understanding which pair is the most trending so you can actually find trending pairs within the market. How would you do this? Well, very simply, you would look at the lowest pairs on the risk off side of things. So JPY is very weak, as well as the US dollar is very weak. So you look at shorting JPY or USD. That's a good approach to be looking at. And then you're looking at risk on currencies. So then you are looking at things like CAD, New Zealand, GBP, and Australian dollar. And then when you're zooming in, you go, well, what's doing really well? Well, New Zealand dollar is doing really well, and Australian dollar is doing really well, and they're pretty positively correlated. So just by looking at the two charts, I have a good understanding of what I could potentially look for in order to continue the trend of this risk on sentiment, which would be looking to potentially short USD or JPY, and we're looking to long things like Australian dollar and New Zealand dollar. And that's how you find great continuation setups that is both FA as well as TA. Obviously, we just did the FA and understanding relative strength and weakness, but that's how you would use the information brought to you by the relative strength and weakness to find quality setups within the FX markets. So not really going to dive too far deep into that. This is a global macro update, not really talking about the FX markets, but that's how you do it. Hopefully you got something from that analysis. All right, so back to the bonds here really quickly. So if yields are rising, it requires a higher yield to incentivize global investors to park their capital in bonds. If bond yields are dropping, it requires less incentive for global investors to park their capital in bonds. So if you want a risk-on environment, if you want crypto to be doing well, if you want stocks to be doing well, you want the bond yields to be going up, because it requires more and more incentive for global investors to look at bonds. Whereas if bond yields are dropping to the floor, that's a very risk-off sentiment. The US dollar, Japanese yen would probably be doing very well, and stocks, crypto probably would not be doing well. So overall, we do see it coming back up. The 5-year did dip below, making a new low, but it does look like it is recovering, so the risk-on sentiment is going to continue forward for this upcoming week, it seems like. So not a lot more to talk about within this section. And then what we're going to be looking at is some gold, some silver, gold and silver ratio, and then some WTI Western Texas Intermediate crude oil to complete the commodity section for the global macro update. So if you have any questions, drop them in the comment section below. We will be starting at the gold and silver ratio because that is a key indicator to gauge where we should be looking either in silver or gold, as well as looking to see if the metals market is actually in a bull run. Usually for the gold and silver ratio, if it's moving to the downside aggressively, we're in a pretty good metals market to the upside, and we're looking to see if we should rather be in gold or silver. Silver is the higher beater. If there's a metal market bull run, silver is going to appreciate at a greater rate compared to gold. But if we're consolidating, if we're in a bear market, gold will hold its value better than silver. So depending on the market, you have to understand which asset might be the better place to park capital. But for right now, with this ascending channel, ascending wedge breaking to the downside, retesting the previous support as a new level of resistance, pretty perfect situation for the gold and silver ratio to continue its momentum to the downside. Now, if that is the case, we want to be looking at silver because silver is going to appreciate at a greater rate compared to gold. So overall, it does look more bearish. The momentum is to the downside. The price action structure is indicating that the momentum will continue downwards. So in that said, we're now going to look at silver because silver is going to be the more anticipated move, in my personal opinion, that I want to be looking at. So I'm already entered, I'm already long, I already got my stop loss and everything. But what happened? Let's look at it. Let's take a picture and then let's do a quick analysis of why this looks good from a technical standpoint, not looking at things like the US dollar weakening, which is overall good for metals, with the gold and silver ratio turning, which is good in specific for silver. So that's why I'm specifically looking at silver in terms of the kind of fundamental standpoint, but in terms of just technicals, it's looking just as solid. So we see key levels of resistance, 1, 2, 3, 4, 5, 5 rejections of a resistance zone, and then we see 1, 2, 3, this was on the 6 hour, closed with a type B, but on a 4 hour, there is a candle closure at that zone. So it's not great, but on the 6 hour, there's just a wick there. And then you got 4, 5, 6. So you got 6 validations on the bottom, 5 validations on the top, making it a very well-respected symmetrical triangle continuation pattern if it creates the right structure in the breakout. And that's exactly what we got, is the right structure in the breakout, as well as all the other things that we talked about within the larger time frame macro with the gold and silver ratio. That's kind of why we're looking at this, but we got to break to the upside, validating the previous key level of resistance, invalidating the previous key level of resistance and making a stronger, higher high. What were we looking for after the higher high? We're always looking to enter at the completion of the exhaustion. So in markets, it moves like this. You got the impulse pushes and you got the corrective moves. You got the impulse pushes and you got the corrective moves. In consolidations, you're just going sideways. But in a trending market, you're going to have a series of higher highs and higher lows. You're looking to enter at the higher lows. You don't want to enter at the higher highs because it's probably going to pull back. Ideally, you want to enter at the higher lows. So what are we waiting for when we broke to the upside? We were waiting for the higher low. Now, initially, I would have liked to see the higher low hold right here, previous level of resistance multiple times, new level of support. That would have been the ideal situation, but we didn't get it. We were still kind of trickling to the downside, and I don't mind because this previous resistance is going to act as a new level of support. So that zone right there broke to the upside, retested. I did have my stop loss below here, so I was not triggered, still in the trade, and it looks like we are making our impulse push to the upside. So there was a little bit of drawdown that was, I guess, unnecessary if you were more patient and were waiting for kind of the momentum to the upside. Maybe you put a stop entry order above this wick here, so you got a pretty good entry, but I entered a little bit early, not a problem. I think the overall momentum is going back to the upside. We see a resistance right here, but with the US dollar currency index dropping, weakening, losing value, I think that is going to be more bullish for silver and gold, because obviously it is a relationship. It's a negative correlation. If the US dollar goes down, usually gold and silver strengthens. We saw that on a macro time frame within the 70s and 80s, where there was lots of inflation, the dollar was weakening, and silver and gold were absolutely exploding. So there's a negative correlation and a negative relationship there. So in my opinion, as long as this US dollar is weakening, I think we will continue to see a move to the upside if we're able to make a higher high and retest this previous resistance as a new level of support. That's going to be great for the overall structure of this move, and I think that we will continue to move higher. So I think silver is a great overall trade, and I'm going to continue to hold on to it, and it's looking pretty good overall, so there's not much else to say for silver. Gold is not as great looking. It is moving to the upside. If we're zooming really out here on the 6-hour chart, we do see that it is squeezing to the upside. We see 1, 2, 3 rejections of this series of higher highs and many rejections or validations of this higher low. So we are getting an ascending wedge. If it does break to the upside and hold 1792, I think we could get a nice little blow off top to hit past the 1800 mark. But as long as gold is consolidating or slowly moving to the upside, I'm expecting silver to continue towards its take profit zone, because if gold is going to be dropping, silver will not be able to hit the TP. They're positively correlated, and if silver if I want silver to move up, I need gold to consolidate or at least slowly move up higher. So I'd like to see this slowly chug along. It'd be great if we were going to break this zone right here for a potential new level of support. That'd be great. That would be good for silver. But I'm not really looking at gold as much right now. I'm mainly looking at silver as the potential long play. So that's going to be the metals market here. And what we're going to be looking at now is the WTI crude oil. So crude oil is a risk on asset. If it's going to the upside, people are producing more products, they are transporting more goods, and that is overall great for the economy because increase in activity, increase in spending. Obviously, one man's spending is another man's income. That will increase the economic machine in a more positive note. And if if oil is dropping, obviously less production, less economic activity, less energy being used, and that's obviously not great. So it does look like we are holding this previous resistance. This is best shown on the daily chart because we do see a key level of resistance here, not yet really broken at around, let's say, $40.50. So in my view, we are still consolidating sideways. We got a support at around $36, resistance at around $40.50. And if it breaks this ascending zone of support, which we'd held 1, 2, 3 times, I'm not going to assume that it's going to have a massive break to the downside. I'm still viewing this market as a consolidation sideways. So I do not view this market as a sell-off if it breaks this ascending zone. Personal belief. It could be moving to the upside, but hasn't broken the 40, 50-ish mark yet. So if it does break that zone, I think it will. Let's go to the 6-hour chart. So if it does break this zone and actually validate, it didn't really validate the zone right here on 22nd of June because it went up and it was a fake out, moved right back down, retested the previous resistance yet again as a new level of resistance, and then got a massive rejection down. But if we get a nice push up, hold, validation, and then a move up, we do see a potential series of higher highs, creating another level of resistance. So we do got some level of resistance, but the path of least resistance for WTI crude oil is, I think, going to be a move to the upside, which is going to be in confluence with the overall risk sentiment that is bullish for risk on instruments and assets, in my personal view. Which is a little bit awkward because usually gold and oil are going to be negatively correlated, but with the US dollar weakening so aggressively, I think that there's going to be some demand for gold and silver due to the money printing, the proliferation of currency, not just with the United States, but globally. So that's basically the global macro update. I'm going to get a little bit of coffee. If you have any questions, drop them in the comment section below, and I'll be happy to answer it. And if there's nothing else really to kind of ask questions on, we're going to jump into the crypto market update, and we're going to be looking at some things involving BTC and kind of things involving crypto markets, basically. So I'll get a little bit of coffee, and then we will jump right into the crypto market update. So we're going to keep this on the SPX. Does look like we are retesting this 3160 zone, but we will see. So we're going to get a little bit of coffee, and then we'll jump right in. So Paul says, yay, crypto. Yeah, so definitely stay tuned. All right, so let's talk everything crypto. So let's go to the daily chart. Let's get out of the 6 hour. Go back to, oh yeah, let's actually go to the weekly, because from the weekly, it's pretty important. So we are still in a trading range. So this is the weekly chart. One candle represents the week's worth of trading. So we're still in this range where we're not really able to break above the 97 zone, and we're not able to break below the 85-ish zone. We are squeezing in a symmetrical triangle when we do come to a smaller time frame. But just on the weekly, we see lots of sell pressure indicated by wicks to the upside. So we know that there's a lot of sell pressure above, let's say, 10K. That is, we know that for sure. We also know that this series of higher lows is kind of the last base for the confidence for the bulls. If it breaks below 8,500, I'm pretty sure that we're going to be moving to the downside pretty aggressively, because since, let's say, the start of May, every single person who's long is now in red. Everyone who's bought Bitcoin after May is now in red if it breaks 8,500. That's an extremely significant zone that we need to hold above in order for the bulls to have and keep their confidence and conviction that BTC is going to move to the upside. That's a major market structure sentiment shift if it breaks down, in my personal opinion. But I think right now, in the short term, because of the risk on sentiment in the global markets, BTC is getting a bid and seeing buy pressure push the price up towards its key level of resistance. So that's on the weekly chart. We do see diminishing volume. So there's a reduction in the transactional volume taking place on BTC, and we see a contraction in volatility. So we'll talk about that a little bit more. But overall, we're seeing less and less volatility and volume come into the cryptocurrency markets. And during that time, during the points of extremely low volatility, they have created massive moves, both to the downside and to the upside. And we'll quickly talk about when the lowest amounts of volatility occurred in the past couple of years. So the first major time where we've seen extremely low volatility is this zone right here. There was very, very little movement in the price. And what happened after this contraction in volatility, contraction in price action, massive expansion in volatility to the downside. Huge. What's the second time? Right here. After the massive move, we got a base, well-rounded base. This is the next point where we saw extremely, extremely low volatility. And what happened after? We got an expansion in volatility where we got an extremely aggressive push to the upside. And then now we're getting another contraction in volatility. So I'm expecting a very aggressive move to happen after this contraction in volatility. We're looking for continuation patterns after the first major impulse move to break the structure either to the upside or to the downside. I'm biasing a potential break to the downside. That's going to be, in my opinion, a little bit more of a chance than to the upside. But hey, who knows? We're just going to trade the price action. We don't want to create too much bias for things that have not happened that are too far into the future. So I'll let the price action decide, but that's my plan basically. And we can see the volatility contraction in greater detail using the Bitcoin Volatility Index. So we'll look at that in a little bit. We'll first look at the daily chart, and then we'll dive into some of the other tools that we use to assess the price action of Bitcoin, the volatility of Bitcoin, and getting a little bit granular into the buyers and sellers and how to analyze that. So I'll get a little bit of coffee, and then we'll jump into the daily chart of BTC USD. All right, so here's that ascending zone, and we can see that, let's just get the brush. We can see that there was a support right here that got held all throughout this zone here. So it did look like the price was breaking below this ascending support zone for a little bit on a smaller time frame when you're looking at it, for example, on the 1 hour. But when you're looking at from a 6 hour, 12 hour daily chart, longer time frames, it was able to hold this low. So the continuation within the symmetrical triangle is, in my opinion, still valid. And we have 1, 2, 3 rejections of this resistance zone, which in my opinion is a valid zone. So we got a nice symmetrical triangle here. And what we're looking for is either a break to the upside or to the downside. If you're looking for the highest confirmation trades, I think if you're waiting for a break below 85 would be a key zone for the support, and a break above 10K and holding on the daily, especially if it retests that zone as a new level of support, would be fantastic. But you do have to consider that 10.3 is not too far ahead. So we can see key levels of resistance at around 10.3 as well. and also around the 10K zone right here. So there's a lot of resistance ahead, and that's why I think that the path of least resistance for BTC is going to be to the downside, but it's just a matter of if the overall sentiment is going to move down as well, because BTC is pretty positively correlated with traditional assets and indexes like the S&P 500. It's around 0.20 positive correlation within the S&P compared to BTC, which is pretty well positive correlated in my personal view, compared to things like gold, where BTC and gold actually have slightly negative correlations, as well as BTC compared with T-bills or bonds, treasury bills or bonds, they're actually negative correlated as well. So, in that said, let's move to the 6-hour time frame, where we did get a move to the upside, and we see that hold of that support zone. I'm going to create this a little bit more clean, a little bit less of a zone, just so I have a cleaner chart to see. So we got that zone right there. All right, perfect. So right now we're just squeezing in between the resistance and support, and we already talked about this for a potential long. I think it's a little bit late now. I think we could see a potential re-entry for additional injections of capital, but right now I'm not looking to long BTC because we're in this key symmetrical triangle zone. What I did do and what we're looking for is alts. Why are we looking for alts compared to BTC? Well, one key reason is this chart right here. This is the BTC Dominance chart. So this represents how significant Bitcoin's market cap is compared to the entire crypto market. So right now we can see that Bitcoin's market cap takes around 65% of all the crypto market cap put together, including Bitcoin. So BTC has a large portion of the overall market cap. It is a dominator, and that's why we always look at Bitcoin before looking at any other alts. So that begs the question, why would we even consider alts? Well, because this chart looks like it's breaking to the downside, right? So we had a nice squeeze here. Let's just get our snip and discuss what happened within the market and what we could potentially see with this falling. So we got 1, 2, 3 rejections of resistance, and we see 1, 2, 3, 4, 5, 6 rejections of a support zone. So it's a well-respected symmetrical triangle. We can see that right here. Now, what happens if it does move to the downside? Because we had a nice little channel or a nice little low base right there, and it looks like it's moving to the downside. Well, if that is moving to the downside, it means alts are taking more of the market share, which is very bullish, because overall alts are going to be a speculative asset or an instrument that traders use, where BTC is more of a safe haven in the crypto realm. We see since 2018 until really now, we've been on a major move to the upside. That means BTC has been taking more of the market share. People are leaving alts and parking their capital in BTC, because when it's a bear market, when it's consolidating, Bitcoin will hold its value better than most alts. Whereas if it's moving to the downside, you know you're in a bull market, because people are putting capital in BTC less, and they're putting more capital in more speculative alts, and that's overall bullishness in the crypto market. So when we see this go down, we know that investors in the crypto market are willing to risk more, have a higher risk tolerance in order to potentially gain higher ROIs. So this is going down. So we're looking more at alts compared to BTC, as well as BTC is just in a consolidation. And when you're looking at relative strength, there's some coins that are extremely bullish compared to Bitcoin. This is also another chart that I like to look at in order to gauge the overall altcoin market. This is the total cryptocurrency market, excluding BTC. And we see that we're in a range here, kind of testing the resistance. If it does break and hold above the resistance, we do have to consider that we will get another move to the upside. But let's just zoom in really. But we do have to consider this resistance zone of this descending trend line connecting the lower highs. So this descending triangle is still in play. We do have room before the next major zone of resistance, where you got a confluent zone potentially like somewhere around here. Somewhere around here, you got a previous resistance, support, resistance, going to be a confluent zone at around 105 billion in terms of the market cap. So there's a range there. And if you're just looking at the average range between the consolidations, you know, it's pretty even in terms of where we're stepping. So if it does break to the upside, I think the coins that are already relatively strong are going to get even more bid volume. So that's going to be my overall analysis of just the overall altcoin market. More specifically, there are alts that are very, very strong compared to BTC, Ethereum, and a lot of the other altcoins that a lot of traders are looking at. So we'll get into a couple of the altcoins that are outperforming Bitcoin and Ethereum. And Bitcoin especially is the benchmark for any alt. If an alt is weaker than Bitcoin, I am not interested in it. I don't care about the story. I don't care about the project. I don't care about the development team. If it's not stronger than Bitcoin over like a 6-month, 3-month period, I don't want it. Well, why would I want it? Right? Technically speaking, it's weaker than the benchmark for my crypto holdings. So I don't want anything to do with it. So when we are looking at alts, we want relative strength. We want to see those alts perform better than Bitcoin, than Ethereum, because those are the two key investments that I'm making in the cryptocurrency market, as well as taking trades for relatively strong alts that prove to me that it's going to appreciate potentially greater than Ethereum and Bitcoin in the short term. That's my game plan for the cryptocurrency market. BTC, Ethereum long-term holds, and then I'll be looking at relatively strong cryptocurrencies for longs and relatively weak cryptocurrencies for shorts, because on Binance, you can long and short many different altcoins. So it's a great place to navigate the crypto markets if you have that option, if you're not living in the United States. So Paul said, so much useful info. Thank you. No problem. That's exactly why we create this crypto market update, is we want to inform people. We want to let people know about our methods, our system, our strategy, so you can maybe learn something. You can maybe take a little nugget of information that you think you would find very helpful in your trading strategy. And that's kind of our plan, is to I learned a lot just from watching people absolutely for free over the years of my trading career. So it's kind of good to give back in my personal opinion. So let's get right back into the charts here. This is the Bitcoin Historical Volatility Index. We kind of use this similar to the VIX, or the Volatility Index within the S&P 500, but this is a little bit more of a macro structure and macro chart that I like to understand. In short, what do we use this for? What I want to know is when price is an extremely either high or extremely low volatility. Like we already talked about within the weekly BTC charts, when you have extreme levels of low volatility, in my view, anything below 4.5 is extremely low volatility, and that's indicated by these green rectangular zones here. It breeds extremely high volatile times. Last time we got extreme low volatility, that was before the 6K break in the triangle in 2018, and then you got extreme volatility to the downside, where you have some continuation patterns that provide unbelievable risk-reward parameters. The second time we had extremely low volatility on this chart was before the 4.2K break, when we had the base created, and then we had a massive move from like 4K to 14K. The third time we're seeing right now. So let's just copy this and go over here. And it looks like we are now at our third point of extremely low volatility. So in my opinion, what we're looking for is we want to see the break of structure. So right now, let's go back to the daily chart here. And this is more of a macro view of BTC, but we see that we're contracting in volatility very, very aggressively. So what we're expecting is this to inevitably end. I'd like to go deeper into the range here, where we're getting into like the 2s, sub 2s. That would mean that Bitcoin is extremely low in volatility. The price action is contracting. And what we're expecting is that to inevitably end, and then we're going to get an expansion phase where we're contracting, getting tighter and tighter and tighter and tighter. Like a symmetrical triangle, it has to break out. And when it breaks out, there's going to be a lot of movement. And that's what we're going to capitalize on, is that massive movement that's going to be coming for BTC. In my personal view, it's not there yet. You know, you could day trade these range-bound markets. I like to wait until the key breakout has occurred and then look for continuation patterns that will give me exposure to the momentum and the breakout of its intended direction. So that's going to be my view of the Bitcoin market just by looking at this historical volatility chart. Mr. Sis says, Bitcoin pump, go, go, go. Well, we will see. I personally don't think that Bitcoin will be pumping like a crazy amount because it's still range bound. And in the short term, I do hope that Bitcoin's going to be pumping because our ADA trade is looking pretty favorable. We are getting a little bit of hesitation here, but it is pushing the price towards its high of around 0.1-ish, and then we still see these steps of higher lows, so still squeezing the price up, and there's nothing really to do other than just patiently wait for the price to continue upward. BTC is doing well. Overall, global sentiment is risk on, so it makes sense that cryptocurrency traders and investors are looking for more speculative alts to try to get a better ROI in the long term, as well as trading. They do provide a greater potential price appreciation than BTC. So overall, Cardano is a great opportunity. Link also has relative strength compared to BTC and Ethereum. And that's going to be my basic crypto market update. I don't want to go too much into it because we do reserve the in-depth relative strength and weakness analysis for the Performante Premium individuals, which you can learn more about with our website, performante.ca, if you would like to learn more about relative strength and weakness, how to capitalize, and how to understand which alts would be good to be in, which alts might be bad to be in, and how to conduct proper technical analysis combined with relative strength analysis to get a really good understanding of what you should be longing, what you should be shorting, and how to identify that. So, Mr. Sis put his BTC address in, so assuming he wants to have some donations. Unfortunately, I'm not going to be donating any money. I'm sorry about that, but maybe if you're a Performante Premium student and you made some good gains, or you were able to collect some profits, you can make money that way as well. But I wish you the best, for sure. So that's basically my analysis for the crypto market here. Let's just quickly look at the final thing. This is going to be the BTC longs and shorts just on the Bitfinex chart. In terms of BTC. So we can see that there's not much that's happening. If we zoom out a little bit, there's not much happening in terms of the shorts that are opened or the longs that are open. So there's not a lot of open interest, which makes sense. The price is consolidating. Yes, we did make a little bit of a pump up. So surprisingly, we're actually seeing a little bit more short activity come into the market where we're seeing longs not really stepping in just on Bitfinex. So overall, not a whole lot of open interest, not a lot of aggression from either the buyers and sellers within the market. So that's basically the crypto market update. We'll just move this to the 6-hour chart, and we will close the recording there. We will answer any questions that you guys and girls do have at the end of the video after we do complete our recording. So thank you very much for watching. We really appreciate it. Hopefully you had a good weekend and are ready for this trading week. If you'd like to watch these live, we do provide these global macro updates and crypto market updates every weekday. So you can tune in live. We do this around, let's say, 10 to 1 p.m. Pacific Standard Time. We live on the west coast of Canada. So if you want to tune in, we do this every weekday, so you can ask questions, get more in-depth detail of what we're talking about, what we're discussing, because if you have any questions, it's always a good thing to ask, because assumption is not a good place to kind of store value in the market. So thank you very much for watching. We really appreciate it. If you found this informational, educational, entertaining, it'd be great if you would subscribe to our channel. It greatly helps us out. And if you give it a thumbs up, we know that we're doing a good job. So thank you very much for watching. We really appreciate it. Thank you for the engagement. Until next time, have a good one.